Sup guys, over here. Today the US Department of the Treasury published the Illicit Finance Risk Assessment, and it's solely focused on the DeFi. The whole thing is about 40 pages long, so obviously we're not gonna go through the whole thing. Let's just check the main quotes pulled by Cointelegraph and CoinDesk. Document states that many groups has benefited from some DeFi platforms' non-compliance with certain anti-money laundering, in short AML, and countering the financing of terrorism, in short CFT, regulations. According to the report, insufficient AML/CFT controls and other shortcomings in DeFi services enabled the theft of funds. Illicit actors, including criminals, scammers, and North Korean cyber actors, are using DeFi services in the process of laundering illicit funds. And capturing the potential benefits associated with DeFi services requires addressing these risks, said Brian Nelson. Also, report noted that some projects have affirmatively touted the lack of AML/CFT controls as one of the primary goals of decentralization. Another quote from the document: DeFi services at present often do not implement AML/CFT controls or other processes to identify customers, allowing layering of proceeds to take place instantaneously and pseudonymously using long strings of alphanumeric characters rather than names or other personally identifying information. And another important quote here: when these entities fail to register with the appropriate regulator, fail to establish and maintain sufficient AML/CFT controls, or do not comply in sanctions obligations, criminals are more likely to exploit their services successfully, including to circumvent US and United Nations sanctions. Okay, my personal view on the whole thing, that I don't know whether or not this is funny or this is sad, because this is like ridiculous to point out that DeFi can somehow be compliant with the AML/CFT. Like, even the whole fact that 99.9% of the wallets on the blockchain are anonymous, and yeah, you can track some things, but what controls can you apply there? You basically then need to turn DeFi systems, you need to turn decentralized exchanges into centralized exchanges with the KYCs. That's not gonna happen in the near future, like that, period. And then just like, why bash DeFi when it's no different than basically sending the crypto from one wallet to another wallet in this case? Like, okay, you're saying basically DeFi is being used for bad things. Well, in that case, like, every transaction can be also used for same bad things. Also, like CoinDesk states that although the goal of the assessment is identify the scope of an issue, the report recommends US government to strengthen its AML/CFT regulatory supervision and consider providing additional guidance for the private sector on compliance check for DeFi services. How are you gonna do that? Seriously? Even if you make some ridiculous regulation, how are you going to enforce that? And you know what's also funny in this report? That Treasury reiterated that most money laundering, terrorist financing, and proliferation financing occurred using fiat currency or was otherwise outside of the digital asset ecosystem. Well, I mean, at least they're acknowledging this fact. Yeah, the whole thing, I think partially it comes from like lack of understanding how things work, because it feels like the understanding only maybe reaches like centralized exchanges, and then anything else is like outside of their scope, and they just now trying to dig into that, I would say like several years later than they should have been. But again, who am I to tell them what to do? I just hope that no ridiculous regulations will be born out of these reports. That's it for this video. If you found it helpful, please drop a like, subscribe to the channel, and I'll see you soon.